You got a hound dog? That's cool, Brent. All right, well, hey, look, love chit-chatting, but let's get to work, huh? It's Tuesday, April 28th, 2015. It's a Tuesday, the first day of the two-day meeting. Obviously nothing on the schedule today, but what do they discuss? Does anybody know? Would anybody like to go on a field trip to an FOMC meeting, the Board of Governors building in Washington, D.C.? Yeah, the Board of Governors, right? Several of the district presidents meet, including the president of the Bank of New York and the chairman of the Federal Reserve. They get together. They discuss things like, I don't know, have you ever heard of the Beige Book? Stuff like that. And they have their meetings, and their PhDs come in and talk. And then they need to meet together as an open market committee and decide, based on all this information that they've discussed on Tuesday, what should their open market policy be? And, what do they need to carry out to create the impact that they're looking for? Interest rates going up, interest rates going down. How do you do that? Money supply going up, money supply going down, that kind of stuff. So, it's a big deal. And tomorrow they will get together, give the announcement, release the statement, and then do a press conference. So that's cool. Not important today, but supremely important tomorrow. Coolio. Well, anyways, how rude of me not to introduce myself. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. If you're watching a recording on YouTube and you sit here and watch 5, 10, 15, 30, 45, an hour, most of my sessions go a little over an hour. If you watch any of it, come on, pay it back. Spend 1 second at least, give it a like. And if you learned something, if you took something away from the video, leave a comment and share what you learned. That's all. That's all I'm asking for. So anyways, we do these sessions every Wall Street morning, 7:30 a.m., which is London lunch. Today I hope to do a lot of technical analysis. We'll do Forex, energies, metals, indices, binary options, and whatever else we can squeeze into, I don't know, 70 minutes. I propose we go through the quick overnight headlines, do a quick around the world as far as relative strength, and then we'll dive in and do some technical analysis. What do you think? Smell like a plan? So good morning. Let me remind you that the purpose of this presentation is education. There are no trade recommendations. Remember, trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. You could have been a horrible trader yesterday. Pick yourself up, dust yourself off, and try twice as hard today. You could have been a winner yesterday, and you could lose it all today and then some. So, long-term successful traders tend to stay small and stay humble on any given trade and on any given trade. They tend to focus on the long term, knowing that the secret to success is not leverage per se, but compound interest. And then, of course, never risk money you cannot afford to lose. All right? Okay, so quick relative strength. I'm looking around the world here. British pound is slightly stronger than neutral. Euro is quite strong at the moment. Swissie's quite weak at the moment. Yen is quite weak. US dollar is quite weak. Aussie's quite strong. CAD is neutral. And Kiwi is fairly strong. So the biggest winners looks like Euro, Aussie, and Kiwi. The biggest losers look like dollar, US dollar, yen, and Swiss franc. Okay? By the way, I'm watching Aussie, and it just broke through 95 and a half. US dollar is hurting right now. We have earnings coming out, which can affect whether people want to buy, or people, I mean market participants globally, whether they want to buy into the US stock market or get out of the US stock market. And obviously, if anything unusual happens in these earnings releases, that could dramatically and efficiently change the value of our currency as money comes in or money goes out. Right now, I'm watching USD CAD fall, which is pretty cool because we planned it out 2 weeks ago. Oh, snapped. Has there been, could you possibly create a trade plan that was more clear? Remember, we started here and then put it here, and then put it here, and then there was that break, and then it came back and reconfirmed, and then we did the blue line yesterday, break, pull back, now we have a lower low. Isn't that beautiful? This is one of those charts where I could frame that and put it on my wall just because I get tingly inside. So anyways, USD CAD's on the move, otherwise known as Oscar Mike. USD Yen back below 119. Yeah, a lot of things moving up. Good. Good. Okay. So that's that as far as relative strength. So like Euro dollar long, Aussie dollar long, Aussie Yen long, that kind of stuff. CAD is only neutral right now over the last several hours, but maybe, just maybe, it'll turn north. But like anybody trading, I don't know, Kiwi Japanese yen? So, maybe some of those yens move. But so here's the funny thing. If USD yen is falling, and it has been for several hours, and both the US dollar and the yen are weak, what have we learned? This goes back to our discussion yesterday about relative strength and currency correlation. Yeah, the yen might be weak versus everybody, but it's stronger than the dollar. So which one should you tiptoe north on? Which one should you trade first? Euro dollar long, Aussie dollar long, Kiwi dollar long, and then maybe you'd look at the yens, okay? Yeah, well, so like Mike, I don't know what time you did that, Mike, but that's why you start with currency correlation first and relative strength exercises second, because in that case, according to what I see over the last few hours, the dollar has been by far the weakest, the US dollar has been by far the weakest, and the Aussie dollar has been by far the strongest. And we knew yesterday that the Aussie was going to move earlier in the week. Just be careful, right? Yeah, I don't care about small losses. Losing's normal. Lots of losses or big losses are abnormal. Not necessary, really. All right. So as far as headlines overnight, that UK GDP, not so good, huh? But that'll be revised. Okay. Just scanning here. National elections are obviously coming up, so we'll see what happens in there. But like I said, besides shock and awe, I don't think there's going to be an immediate fiscal change. Therefore, I don't know, be careful with the currency, but it shouldn't. I think central banking policy trumps all of that right now. French CPI, highest since January 2010? All right. Whatever. Blah, 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 blah. Skip, skip, skip. Da, 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 da. Dee, 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 dee. Skip, 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 skip. I'm just going through all the various headlines that have come in. Skip, 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 skip. Here's a little overview. Equity markets open mostly lower following the sharp gains seen on Monday. Greek equities open higher than pair gains. The FTSE 100 was weaker amid UK GDP. Energy firms beat estimates on better refining results. That would be BP and Total. Daimler beats Mercedes. Daimler beats the estimates on Mercedes-Benz unit. Cool. Apple beat estimates. Deutsche Bank shares. Follow through selling after a recent strategy update. Blah, 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 blah. So reporting today in the United States, Ford, JetBlue, Merck, Pfizer, UPS, Whirlpool. So like UPS, if they're hurting, that's not going to be a good sign for the overall economy. So just tons and tons of stuff. Some speakers today, Cameron, stated that the country's economic recovery cannot be taken for granted. The Japanese Vice Economic Minister said making steady progress in ending deflation. Would not be surprised if BOJ's 2% price target goal was delayed. How many days has it been since they updated their quantitative easing program? Is anybody counting? Let's see, it's approximately 179. What, you don't count this stuff? So anyways, I'm hoping since let's be blunt here. The changes that were supposed to happen on the government side haven't happened. Quantitative easing has increased asset prices. The Nikkei is at a 15-year high. But there's no inflation, man. So if they're not going to be able to make changes on the government side and make the government more efficient for the economy, then maybe they'll do another QE or some stimulus or something, right? So anyways, so here's the economic finance minister saying that he wouldn't be surprised if that 2% target was delayed. Okay, the central bank had made a comment that there's no change in the overall trend in inflation, which is flat. Okay, wages are flat, household spending's down. Okay, so keep all of that in mind. Maybe Japan's going to do something again. I'd probably delay, if I were to guess, nothing's going to happen until late summer. But anyways, if they do it now, hey, it's not even May yet, so there's time for them to jump in and do something, especially in the new fiscal year. So wouldn't it be great? Wouldn't it be great if tomorrow or Thursday, let's say on Thursday, the Bank of Japan announces a new stimulus package or quantitative easing or something? Wouldn't that be nice? Keep your fingers crossed. People's Bank of China, economist Ma said to maintain prudent monetary policy approach, need to inject funds via bond purchases. So no QE for China. And blah 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 blah. Skip blah 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 blah. So at 9 o'clock today we got Case-Shiller, which is index of housing prices in some major cities. 10 o'clock we have Con, which I don't really care about. Richmond Fed Index, okay, doesn't have that big of an impact. And really, we're setting things up for tomorrow, aren't we, with the FOMC? Cool. Those are your headlines. Thank you, Jenny. Solomon sent 6 for 6 from last Friday as far as trading, averaging with 35 pips per trade. Cool, man. Good for you. Okay, now. So let's start with gold. We haven't looked at gold for a while. And look, we broke out and we went right back. That's called a range. Yep. Frustrating, huh? Yep. Let's see if I can move this over. Yeah, and you know, to me, it's not surprising. I mean, you've been hearing it from me for a very, very long time that it's a sideways market. Yup. So some people are interested in that. You know, right now, a little higher would be a half decent sell. A little lower would be a half decent buy. I'm just not interested. Okay. It's interesting how it came up precisely the 618, but not of its move, of this old move. So it's still trading logically inside the old range. Even though there was a breakout, it didn't continue down. We're not quite there yet. Can anyone confirm these prices? Let me Google it. Hang on. Oil prices now. I'm gonna double check. I think it's a WTI now. Yeah. Just like to confirm my intel. Approximately 56.73. Yeah, 56.74. Yeah, perfect. Aight. So, yep. We're not quite there yet. You see my concern? Right? That on the macro level, I'm not quite ready to sell. It'd be closer to 65. So I don't really want to sell. So if you look at the technicals now, here's what I think will happen. And I already drew it last week, right? And remember, I think we drew the expansion and the retracement, right? And what we're looking at is a retest of this area, which is pretty close. We're pretty close to that. And really what price is doing is moving sideways or down to converge with the 21 in the future. And that's what this guess was when the 21 EMA hadn't even crossed over yet, that it would come down and then kick off the 21. Why? Because that's how you use the 21. That's what it's there for. If you don't do that, you should probably get rid of your 21. Okay? So you could buy the dip, rally it up from 55 to 65, and then sell with great vengeance and furious anger. Okay. So that's the plan from a couple of weeks ago. That's fine by me. At least we're clear, right? Don't you like it drawing all these things out 2, 3, 4 weeks of price action? We do it all in advance. So we look at there and I'm like, yeah, that makes sense. Oh, well, Buzz says, well, how about now? Yeah, as far as that? Well, are you at support or resistance based on this chart? Oh, you think that's support? Okay, well, if you believe it's support, then you would buy. I don't think it's quite support. I'm not interested. if we're at 54, 54, I mean, we already had this little mini touch of 55. I guess that's even 56. Yeah, we're almost at 57, 79. If it was 55, maybe, but, no, I'm not ready. And then I look at the oscillator, and it doesn't look like today to me. So, yes, but if you thought you were at support, you buy. But again, what I said was I'd want to buy off the 21. Now remember, we're also hitting a moving target, so I'd rather, how about this, buy at or near the gray zone. Or how about 55.55, something, but 56.81, you would have had to have been aggressive on a smaller time frame. Not on the daily chart, obviously. And let's say you're using hourly oscillators, then you're about 1, 2, 3, 4, 5 hours late. So maybe London Open at 56. If you bought it at 56 at the London Open 5 hours ago, pre-London, maybe. Now, no. All right, so that's that. So, if I were me. That is more like 53. Well, same thing. We'll see when we get there. I look at that. I'm like, not today. Okay, S&P 500 back below the all-time high. Okay. And my next sort of area of interest, or AO, area of opportunity, is kind of down in here somewhere. I need to update my Fibonacci. So, yeah, 50% retracement from that. Remember, we started this up move way down here. Way down here. So, cool. So, 2040, and it went all the way to 2130. Cool, man. So, maybe something like this. Do 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 do. Nobody told me that there'd be trades like these. Nobody told me that. Strange trades indeed, right? Right, so Dar says the S&P 500 like a roller coaster right now. Yeah, earnings season. Yup. Yep, that's what we talked about. What is it? End of April, 5 weeks ago. Yeah, so it's not unexpected at all. Okay. Okay, how are we doing here? Remember, we had two trade plans. One, buy it at the first gray zone. Okay, and then the second one, I know there's a lot going on here, but I believe we said double bottom, higher high kind of thing. And right down, but then it would go up into the reverse fib, then it would come down, but if the bulls were going to buy this, then it would double or even triple bottom, if you want to call it, and then head up, break out, pull back, and gone. Or plan B would be it would come down, it would rally, it would hit the reverse fib, drop down to the bigger macro level of support, which you can see is a macro 382, then retrace all the way back into the 50% reverse fib. But a lot of those bears would have been wiped out on that huge retracement. Remember, the retracement would have been 50% of the mini macro, but 100% of the last extension, which would then produce a 50% reversal of a 1, 2, 3, and then up to the next high and maybe higher. Long story short, right now it still kind of seems that the first one's working. It produced what it was supposed to. If it doesn't make a higher high, then I just say sideways, and I'm just not interested because it's just not moving up or down. Any of that makes sense? I know there's a lot in here. And there's probably even more than you see, and it looks messy. But there's, there's knowledge in there, yo. All right, so Piggy, can't you see 4 hour? Go out to the daily here. And that's the move that we drew. Remember, we did this not long ago. It's looking really nice, right? And for the 100th time, right in the middle of April, as we surmised, using our fundamental analysis, and then, if I may, it all set up on the inverse head and shoulders, right? Lower, low, lower, high, lower, low, lower, high, lower, low, higher, high, higher, low. Take the projection up in here, all completely put together in advance. Here's plan A, right? Down to the quick support and up. Plan B down to the bigger support and up. Well, it looked like plan A worked, kicked off to 21. The trend's aggressive. When you're riding the 21, you're bullish and aggressive. When the 21's above the 55, you'd assume it breaks resistance. We identified trendline resistance based on connecting previous tops on an angle. It's broken through that. Everything's good. And once again, about 5 weeks in advance, we guessed that this particular week, the pound would have the opportunity to reverse if it wanted to, gave us the reversal pattern, made the higher high, made the higher low, 50% up, hitting our targets, breaking out, moving to the next level. Okay. Notice that it started around 175. I think it's pretty, it has the potential of hitting 185. Now, we do have some question marks ahead, like the elections and stuff, so that could mess all of this up. But as far as the technicals, an entry around 175 looks technically like it could hit 185 pretty reasonably. Kenny says bears possibly would be 53.20. Oh, must be something. Okay. So anyways, that's all I'm saying here is it's just, keep buying the dips if you're a bull. Right? That's it. That's all it is. Just buy the dips if you're a bull. And it's trading very technically. Up, down, up, right? So you can see we put this one together in advance. That was tradable. Then it makes a higher high, right? Drag, old support, it's now resistance. Or no, old resistance, it's now support. Pulled back, boom, you buy it here. Makes another high, right? Take the old resistance, it's now support. So again, it dropped down, made a higher high. Easy, man, right? Just remember how we were talking about when the fish are jumping in the canoe? You should go fishing. Okay. Here's another breakout. If you recall, at one time we were stuck in the wedge. It made a lower low, then a higher high, then we were in the middle. And I said, draw the wedge, consider yourself in a triangle, and then wait for the breakout. Remember, I said there were two different potentials here, right? Breakout to the up. Okay, let me get it so it doesn't shift anymore. Okay. Let it break to the up, pull back and buy, or let it break to the down, wait for the pullback and sell. How many people remember that extremely clearly when we were inside this gray zone, to let it break, let the market make the decision, let the market battle it out, and then trade the pullback and gone. Anybody? Like a real lesson, it's somewhere in your mind. This might be a skill that you have now. Cool. Thank you. Well, that's a tough one. Not many people have that skill to know when to stop trading and let the market figure it out. I mean, that it might be a small little thing, but I think it's a big little thing. When to say, whoa, 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 lower, low, higher, high? What's that all about? I mean, I don't know how you would know if you're a bull or a bear, right? So, when do you back out and let the market decide? And so that's how I did it, drew it all up. And then remember, we were inside this gray area, and I drew these orange lines as an example of what to wait for and how to trade it. So in this case, it broke to the upside. There were two ways to have traded it. It broke, looks like on a Friday, right? And then it gapped up and came back around. So either way, right? Either the first break and pullback, or even better, the second break, which actually went to approximately where I drew my breakout, came back down, roll reversal, long and gone, right? So on and so forth, so on and so forth. Okay, so that's how you trade it. And remember the other thing I said, if it broke out sort of over here, like in fact, like it did, I said the potential for it to be a fake out versus a breakout is much higher. And it was quite high. And as it gets closer and closer to the apex of the triangle, the breakout is more and more reliable. Everybody got that one? The closer prices to the apex of the triangle, the more reliable the breakout is. If I put that on a test, would you be able to write it? It's important though, right? I mean, you should know it, right? So anyways, that's doing its thing. And so what you going to do? Well, I'll tell you what, I'm interested in selling as we get closer and closer to, so we're at 109.50. Next one's 110. So I'm kind of interested in looking to sell it fairly soon. Okay. What would I need to help me make my decision? Well, how about a reversal pattern? Oh, Solomon, I just used the triangle. Boop. Okay. Wedges and triangles are all the same to me, Demeter. It's all the same. It's all the same. It's like head and shoulders and, oh, no, that's not head and shoulders. That's a crown pattern. Oh, no, that's not a crown pattern. That's a 1, 2, 3 pattern. And I'm like, it's all the same. It's all the same thing. Okay. So yeah. Okay. If you were a bear and you sold this spot here, that's a nice spot. Okay. You can see something's going on there, and it's about a 50% retracement. Okay. And then if you notice on the other side, if you measure from the bottom to the top, this is about a 50%. The bulls did their job. That's why you get things like higher highs and higher lows. What set this this tone up though to say whoa, draw the wedge. So we had this lower low, okay, relative to the earlier ones, off of this resistance area. So if the bulls were going to win, this thing was supposed to extend down to parity, right? But it didn't, and suddenly it made this big old high, okay, on a more micro level. And that's where you say, okay, it made the lower low. It's supposed to make a lower high, lower low, right? Instead of it made a lower low, higher high relative to this area. So that's where I go red flag, red alert, shields up, go neutral, let it break, take the second chance. Okay, again, seems like a simple elementary sort of thing, but in a major way, it's advanced. To just know when to just say, stop. Okay. So anyway, I'm glad that you're here every day when you log in and you see these plans. We do them in advance. There's no hindsight stuff going on. We draw it all out, and I draw this line, I do this, and I tell you why this is important to me and why that's important to me. And then we revisit it a week later, and it's like, holy smokes. Well, Buzz, I'm never going to answer that question for you. All right, it's between you, your spouse, your accountant, your God, but not for me and you. Should you sell the euro now? How the heck would I know? I don't know what your plan is. I don't know what your bias is, and right? I mean, I don't know, right? It's just, I don't know. It's not my decision, mate. So I will not answer that question. That's the only one. Should I do this, Wayne? Should I do that? Hire a financial advisor. Yeah. Yeah, I know. So like my current client that I make decisions for, I charge them 50%. I'll make the decision. I'm keeping half the money. All right, USD yen. How would you describe this? Yeah, well, if you're a bear, you'd probably sell there, and then you back out. And if you're a bull, you oops, come on now. Okay, if you're a bull, there's something going on here. What's the trend when I back out? Or how about this? Describe the market. Range bound or trending? Yeah. So what would you expect it to do? Suddenly start trending again? Or stay range bound? It's a loaded question. You should always assume what, and this is, I believe, part of efficient market hypotheses, that what happened yesterday is probably going to happen today, which I laugh because, then I'm also required as a professional to tell you your past performance does not predict future results. So the finance industry is full of paradoxes like this. It's just like, it's crazy that the industry is so fragmented yet still works fairly well. So, to get, let's say your MBA and qualify to become a bank trader, or work for Goldman Sachs, or whatever, your professional path is, working for a big old bank, something like that. Everyone's taught efficient market hypotheses, that all information is priced in automatically and instantaneously, so that there's no way to actually beat the market because the market knows everything and you don't. So you can't beat the market. The only way to address risk is through diversification and long-term investments, and let the beta carry you up, and don't even try to get alpha. That's what everyone's taught. And then you have to say, past performance does not predict future results, which is against the whole thing that everyone's taught anyways. It's amazing, because everyone's taught that past performance does predict. It's so silly. I don't know. I'm so confused. The market's funny like that. So anyways, if it's been sideways for a long time, it's probably going to stay sideways until what? until it breaks. And then one thing that I like to teach, and again, I don't know if it's taught in many other places because I'm self-taught, but and from the School of Hard Knocks, right? Blood, sweat, tears for years. To let it break. In fact, you don't need to help it break. In fact, you should let it break. But then when it does break, because you were wise enough to let someone else break the support or resistance or whatever's been going on, and then catch the second chance, right? So anyways, it's kind of moving sideways. Technically, I don't have a problem with you buying it, down in here. It's basically 1850, right? But should you expect this to go to 125? We talked about it, I think maybe this first touch. I said, don't be shocked if we made it to 125. And now I'm saying, don't expect it to make it to 125. Why? Well, we went from a trending market. Now, it had made a higher high, then a beautiful higher low, and I believe this was a logical re-entry into a trend. So a higher high, higher low, higher high, right? So if you buy a higher low, you expect a higher high. So I said here, hey, don't be shocked if this goes up to 125. Did it? No. Well, how was I supposed to know that then? But you adapt very quickly. So what it did is it went up, made a 618 of this, and then it was supposed to make a lower low, but it didn't. Aha! Range bound. Okay. Right? Based off this. Right? So again, this here was, so this was the highest high at that moment in recent price history. Came down, made a higher low, because this was higher than the lowest low, which you can't see. So that higher low predicts a higher high, so we should be up here, right? But it didn't. It whipped out here, which is approximately 618 of this move. So that lower high predicts a low low, right? But it didn't. So what do you do when it doesn't make the higher high it was supposed to do, or make the lower low it was supposed to do? Very similar. Instead of the wedge here, you use support resistance horizontally, and now you're range bound. And what's the other thing? You change your trading strategy. You change your behavior from trending, which you use Fibonacci, to, how about oscillators? Do you guys want a quick lesson on oscillators in range-bound markets? Okay. The most important thing when trading the range is to be at support or resistance. Don't even look at your oscillator unless you're at hardcore support or resistance. What's the first step? Identify support and resistance and wait for price to get to support and resistance. 1, 2, you rock. Okay, great. Second of all, you sell at resistance and you get support. Now, if you still have a fundamental bias that you believe in, let's say you still believe US is going to go up and up and up by the end of the year, then you can just decide you only buy at support and you only sell, and while you're in the range, you exit at resistance. But you believe one day it will break out to the upside, then, well, whatever, you'll trade the pullback. Okay? Or you could be, neutral and just sell at resistance, buy at support, sell at resistance, buy at support, stop and reverse type stuff. Okay? So anyways, price has to be at support or resistance. If at resistance, you look to sell. I didn't say sell, I said look to sell. If you're at support, you look to buy. Then you use your oscillators. And if at this time, like this, the oscillator is overbought, you are allowed to short. I was trying to Get this thing going. Okay? Because sometimes you'll be at support and resistance and you'll say it's all good, but the oscillator won't be way overbought at resistance or way oversold at support. And you'll see that many times it'll lie to you. Have you ever been lied to? You're at hardcore resistance, you sell and the sucker goes up? Doesn't that make you mad? Yeah. You might be missing one small step. You might be missing 10 steps, I don't know, but okay? Yeah, but probably just this little tidbit will help. Okay? How about this one? Way oversold. Should I buy it? Well, here we were not sure if it was sideways or not. You can see we were hoping for it to go up. And obviously, I didn't play the range yet. Okay? The next one was basically the range. Okay? So if you bought in here, as it suggested, then it would have worked out. Now, when price got down to here, it wasn't ready yet. Okay? When it got down to here, it was ready. So this, for example, this one is 90% oversold, okay, which gives you permission to buy when you're at hardcore support. Okay. Okay, I'm trying to open up that properly. Okay. How about this one? How about this one? See, this one's 84.4% overbought, starting to fall. Do you? No, not at resistance. Okay, now it goes up a little higher. 88.6% overbought. Do you sell it? Yeah, you could, huh? Yeah, I like the Whipsaw song. RPP, are you an old-time boot camper? Okay, again, way oversold. Are you at support? Well, if you believe that's support, and we actually have it identified as support, you could long it, couldn't you? Depending on your time frame. So like if this was a 4-hour, it would be much different, right? So on and so forth. Okay? How about this? Like this one here, way oversold, way oversold. Do you buy them? No, not necessarily. If you're trading the range, don't get caught up in the price action. If you decide you're range bound, you only buy at support and sell at resistance. Do you remember? Don't get caught up in the price action. Now, in some of these, you can see I wasn't playing the range. Well, maybe shame on me. Okay? If you believe you're range bound, you only buy at support, you only sell at resistance, and you only do that when the market is way overbought or way oversold. Okay? Like this was an okay buy, and it eventually went up, but not very quickly. But none of these were really that good down here either. This was the better one. At support, way oversold. Okay, you go long, your stop is below, and you just let it work itself out. Okay, so on and so forth. Okay, sell. And you can see even the little small support and resistance levels. Notice by small, we're looking at entire weeks here, guys. This square right here is all of last week. But you can see if you line up this old support, it definitely was resistance. And look at the oscillator. Came down, hit support, definitely support. Oscillator takes it. Now we're sort of, it feels trendless even more. Like like it's becoming more and more trendless, right? It tried for a while to break out, right back in, down into the zone, back into support, and then it tried again and didn't even get to the, and failed again. It feels like a vice squeezing, doesn't it? So you should get more and more conservative. Okay. Would you sell here? I wouldn't. Okay. So your opportunities now are wait for it to be, very oversold or very overbought. So you could reflect your risk tolerance like this. Hang on, I got to get rid of this. There we go. Make a change here. Change. Don't be afraid to update your indicators to reflect your tolerance. Okay. And you say, I don't want to buy unless it's at least 80% overbought, or even 85. But let's just say 80. Instead of 75% oversold, which is the same as 25, right? You're like, I want it to be 80% oversold or 80% overbought before I even consider trading, even if it's at support or resistance. You see what I mean? I've grown more conservative. Okay? And then if you're even more conservative, which I think would be even fine, you can say, I want it to be 85% overbought or 85% oversold before I even think about it. Okay? And you cut out all the fake outs. So now, if you look at that, if you thought you were at support, that was tradable. Okay? If you thought this was overbought, that's tradable. You can see there probably wasn't in those cases, right? So it keeps the fake outs from taking your money. Okay, can you see that? Like, this is not a good sell. This is a pretty... Okay, and you grow conservative. Okay, is this a good buy? Well, the support's not amazing unless expected the breakout. Is this a good buy? No. Is this a good buy? Well, you're at support, so plausibly. Buy it, drop your stop, pray. Okay? Is this a good buy? Not really. Not based on your risk tolerance, right? Is this a good buy? Not really. You should already be long here, right? So on and so forth. So that's how you sort of adjust things. The TDI oscillator? I have no idea what that is. Yeah. You know what? I think that's enough for today because we're getting closer and closer to FOMC. The closer we get, the less likely things are going to behave. Let's do some more analysis tomorrow, and we'll talk more about the FOMC, I'm sure. Oh, the dynamic trader. I don't know. Who cares? Yeah, I don't. Yeah, so the question is, what is that particular oscillator? I don't know. Obviously, it measures over some sort of oscillation, overbought and oversold cycles and stuff. I use MACD and I slow it down to represent overbought and oversold conditions for the market in general. And I use the stochastic oscillator to represent overbought and oversold conditions for price action. And I use these two oscillators purposefully. In fact, I changed their settings with intent so that I can align market forces with price action. And when they're congruent, my chances of success, or let's say probabilities of success, are greater. So I use these tools in a very specific, logical way. The math makes sense if you look at it. And just don't need the other tools. Okay? Hey, anytime, man. Anytime, Jenny. So peace on earth. The world really needs to hear it more and more. Peace on earth. May the pips be with you. May your profits be above average. If you're watching this on YouTube, give it a like, leave a comment. And on behalf of TradersWay and myself, we thank you for being a loyal client. We appreciate it. Cheers.